Now on to today's market movers. Let's send it back over to CME Group for futures and options trades.
Welcome to Market Movers. I'm Jim Iuorio with Scott Martin.
Hi, Jim.
So Theresa May has asked for another extension on Brexit. And
You're kidding.
It's being knocked around as to what the duration of the extension is going to be. In a short answer, is it ever really going to happen?
No, but I think what's going to be funny about the extension, Jim, is if there's an extension that is labeled as forever, maybe that's actually the one that she could get passed through.
Okay, so what's more of a currency negative? I'm talking about the sterling and the euro. A hard Brexit, or just the realization that it's so difficult to have an elegant
departure.
Yes,
yeah. Right. I agree. Here's what I think on the currency front. I think it's destabilizing, negative for both currencies, frankly, because I think it shows that there's a threat to the EU and the Eurozone itself, and certainly the currency, and certainly the GBP, the British pound, as Britain breaks off, what they're going to have to do to kind of stimulate their economy, refire some of their economic data. That, to me, is currency negative.
Like it. Now, before we dive into our trade discussion, I'd like to point out that these are examples, not recommendation or advice. We're looking at two different assets here. We're looking at gold, and we're looking at the British pound contracts.
Yeah, two interesting ways, I think, to look at what's coming up, Jim, both, like you mentioned, directly in the GBP, the British pound, but also looking at gold, at GC, as a way to kind of maybe see how, if maybe there isn't quite that reaction in British pound right away, maybe there's going to be something in gold. So specifically, Jim, looking at gold here today, because I like trading gold as kind of an additional positioning to other things that I have on, in the equity side, let's say, or in ZN with bonds. Looking today, though, Jim, at buying the week 5, 1325, 1350 call spread in GC for about 3 ticks. This trade expires March 29th, so we got a few days here. It risks 300 to make 2200. The underlying on GC, by the way, when I price this, is about 1300. With the belief, seeing that we had a big sell-off in GC at the beginning of March, it seems like GC has started to find a little bit of a bottom, and I believe that may be that risk-off trade that we're looking for as we come into another vote.
Okay, this is an interesting trade. It's a relatively inexpensive trade to make a potentially a lot of money, but it's $25 away. Do you think there's some sort of panic buying that happens in gold?
I believe that there is some of that, and there's also just a potential that gold, especially with the Federal Reserve meeting today too, that we just have, again, this liquidity rush maybe that's out there, this supportive nature of these central banks that will lift gold, Jim, and therefore this could be one of those expressions you put on that you may want to manage. I'm not saying this will completely fill out, but it does have a nice price point on it.
Central banks being involved probably because of the Brexit negotiations as well, lifting gold. I get it. Okay, that makes sense to me.
Thanks.
I like it. Yeah, sure. Now, I'm looking at it a little bit differently. I'm looking at the pound itself. Now, the British pound has rallied up quite a bit, I guess because people don't think it's going to be as hard a Brexit, but it's rallied up to former highs on the 6-month chart. So I'm looking at buying the week 5, same as yours, the 131.50, 130.50 put spread for 30 ticks. So it's 100 wide, paying 30 ticks for it. Expires March 29th, risks $187 to make $437. The underlying right now is trading at 132.41.
So I like the expression. I think the direction's right, and I like your call on the charts too, because you're right. If you look at that chart, it seems like it bumps up against that kind of top-end resistance and pulls back. So seeing as how this, I still think the Brexit is going to be a tough Brexit. I really do. So therefore, that to me is going to put pressure on the currency. Put spread is a great expression to have on, my friend.
I appreciate that. So do you actually think the Fed is thinking right now about what happens in Europe and is going to dictate policy?
It seems like it, doesn't it? And don't interest rates in the United States suggest that as well? I mean, you put that next to the data that we have out there on GDP and jobs, which is good, but inflationary data, which is nowhere to be found. It seems like the Fed's in a pretty good sweet spot to stand pat.
Gotcha. Thanks for joining us on Market Movers. I'm Jim Iuorio, where we are helping to make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.